All right, so everyone that's been following my channel knows that two of the most important things that surround my trading are market structure and price action. Okay, I don't use indicators other than the volume profile. All right, and there's reasons for that. Those that are intermediate or maybe experienced level traders, or maybe even a beginner trader that knows by now that indicators do what they lack. And traders always ask me, well, is there any, especially beginner traders, is there any particular way to become profitable and make money in the market without using any overcomplicated strategy? Now, the strategy that I've created tons of video and content surrounding, because I'm a supply and demand style trader, is pretty simplistic. Okay, you just have to spend time watching and rewatching the videos. And even ask some of our traders over on our Discord community. And I highly recommend, if anybody who's watching this video, especially, I'm not talking to the ones that are already currently join our Discord community and also become a subscriber here on the channel. But anybody who's new, first time watching, come across the channel and watching this video today, highly recommend you joining our Discord community and even asking our community members, hey, Mike has covered many videos on his strategy, okay, about actually how he trades and is able to be profitable each and every day. Is it overcomplicated? How simplistic is it? And they'll let you know. You just have to put in the work, and that work means putting in the effort of sitting down, back testing, forward testing. I do not recommend anybody just going full-fledged, dumping money into a brokerage account and then start trading overnight. You need to spend time, gain the experience. And I always talk about the two concepts of market structure, understanding the flow of the market, how the market's moving, being able to see setups within the market, and following price action, okay? But the key, the bread and butter, or my cornerstone to how I trade is all surrounding supply and demand, okay? But traders always ask me, is there a simplistic way of being able to trade and just possibly looking for one type of setup that would allow me to make money daily? I mean, there are ways to be able to, if you're looking for setups within the market, okay? And I'm going to show you in what I talk about, a liquidity grab, which most traders would call it, okay? What to actually identify and look for within the market, all right? Now, that is, as the market is doing its thing on a daily basis, making ebbs and flows, making higher highs, higher lows, lower highs, breaking structure or having having market structure shifts throughout the day, because we know at any given point the market can do what? Stop, shift, and then we have a reversal going on, okay? But you have to have a keen eye and look for certain things, okay? There are all types of different ways to trade, and strategies that people use or traders use, but the overall goal, like I always stress, and what is trying to be accomplished and who's trying to accomplish it, which are the banks and institutions, they are setting up what's called liquidity pools or areas of liquidities, traps within the market, to where they are looking to go back and grab that area or those areas of liquidity. The market is either pushing up to grab liquidity or pushing lower to grab liquidity. And you don't want to be trapped in their setups, okay? You want to be able to trade with the banks and the institutions and understanding institutional order flow, if you want to call it that, okay? Because that's what it's called. You want to be able to move in the direction and understand the setups that they're creating, okay? Or the traps that they're creating within the market, because their traps of what they're generating or creating are basically set up for them to be able to maximize and capitalize on. So understand that. So there is something that you can do if you know and understand the term liquidity, all right? And I've talked about this in the past. They're called liquidity sweeps, liquidity grabs, whatever you want to call them. Basically looking for areas where there's equal highs and equal lows at, all right? So I'm going to show you an example. We're going to go back. And now they don't happen every single day. You're not going to see this sweet setup. Things are going to look different on your charts on a daily basis. But focus on where there's areas of equal highs or equal lows. So if the market is making lower lows and lower highs to the downside, okay, and then you get to an area where, say for instance, the market it makes a low, pulls back, comes back down, makes an equal low, and then we get a sweep of that area where the market is taking out that area of liquidity. Normally what's going to happen is once they've capitalized or swept an area of liquidity, it's going to be a quick pushback up in the opposite direction, okay? And vice versa if we were coming from the top. Price is making higher highs and higher lows, makes a high, pulls back, goes back up to basically make a double top or to retest the highs there, pushes down, goes back up, wicks out that area. Okay, that's the institution or bank sweeping that area of liquidity just to do what? Throw the market down. Now, I'm not saying the market's going to continue running and have a make a reversal to where it's going to start trending to the downside, but those are types of setups what are called liquidity sweeps, to which you can capitalize because the institutions are doing what? They're grabbing areas of liquidity. Okay, all right. Running the lows or running sell stops or buy stops or whatever the case is, and then they are quickly shifting swiftly the market back around in opposite direction. So let's take a look here. I'm just going to show you here on the charts. Those that may already know, how to identify liquidity sweep. This will be just like a refresher for you. But for anyone who doesn't understand that concept surrounding liquidity and basically looking for being able to identify an easy setup that you can capitalize on if you don't have a particular strategy that you're currently using. Now, these type setups, again, like I said, do not happen every single day. So we'll take a look here, all right? But when they do unfold, they tend to kick off pretty well and provide a nice profit for you, okay, if you know how to trade them and know when to get out. So take a look here. I just want to show you the market was running. This is from this transition over from July the 6th to the 7th, okay? So the market was moving to the upside after pushing lower, okay? So then it starts to, we get a market structure shift here, okay? Just looking off the lower time frame for me, my 12 range chart, and maybe you're using time-based charts, so maybe you're using a 5-minute chart. I'm not saying the two are comparable in one way or the other. I'm just saying you can find these setups based on higher time frames and lower time frames, okay? And we'll take a look at an example off of a higher time frame, which is my 60 range chart, all right? Maybe you use a 60-minute chart. Regardless of the fact, if we look here and see what happened, the market starts making little swings to the upside, higher highs and higher lows, okay? We see a high that's created here. The market pulls back, okay? It pushes up, all right? Breaks above here, sweeps above if you want to say that. Takes out this little high here by wicking out here. So now we got a new high right here. But look what happens. The market pushed up, pulled back. Got a low created. Pushes up, pulls back. Now we have what? The first identification of equal lows, okay? We have lows here. The market is retesting this low here, okay? It pulls back right here. So we got low here, okay? Pushes up, comes back down. What do we have here is retesting this low here, pulls back, and then breaks lower, right? What is it doing? It doesn't come down here below and with the full close of a candle to the downside. What does it do? See this little this bullish candle here, right here, okay? Because when it turns back around, it pushes higher, okay? So this is a bullish upside candle here. But look what happens. The tail, the wick of this candle right here, okay? Before it closes to the upside, it wicks right below these lows right here, these equal lows, low here, okay? That's what's called a liquidity sweep, okay? The market comes down, it breaks below before it takes off to the upside. So that's what I'm trying to get you to understand and identify those equal lows and equal highs, where the market makes a double top or makes a double bottom, sweeps right below it with the wick or the tail of a candle, and then you get a bullish burst to the upside. All right. So most traders or people always ask, well, what do you look for to get into the trade once you see, this type of setup right here? Well, once it turns back around, again, like I always do, and look for my trading is a break of a candle in the opposite direction. Meaning I want to see a bullish candle in this instance here, taking out a bearish candle. So meaning the last down or last bearish candle that formed, I want to see a bullish candle take that out. So predominantly what we have here is we have this wick of this candle here, okay? And then we get a pullback, and then we get another candle here, this bearish candle here. So anything, the next candle that closes above this red candle right here, this bearish candle right here, which will be this green candle right here at 44.37, I'm long at that point, okay? I'll be long because we got the sweep below these lows here, all right, with the tail or the wick of this candle here. Then the market pushes up, bearish candle, pull back, bullish candle break above, and then what does it do? Look what it does. After 44.37, it takes off to the upside. From that point, after it grabs liquidity right here, sweeps this area, is blasting to the upside. Okay, so look for things like that. Okay, it's not going to happen every single day, but when you do see, because basically this is an area of support right here. Same thing on the flip side. You see those sweeps. You see those sweeps taking place at an area of resistance where you have a double top or equal highs. The sweep of that area, price turns back around. You get a bearish candle that takes out the last bullish up candle after the sweep. You look for the closure of that below that bullish candle, that bearish candle that comes down. Close of it. Take your opportunity to go short. That is the institutions or banks grabbing those areas of liquidity within the market. Liquidity is money that's resting in an area that they are looking to capitalize on. All right, so understand that. But it's also areas where they're stopping traders out as well. Okay, so you can think of the two hand in hand. Okay, buy stops, sell stops equals liquidity. All right, or areas of liquidity, because at most buy stops and with buy stops you're gonna have equal highs. All right, the market may be trying to push higher, making equal highs, double tops, whatever the case may be. The market's pushing lower, making equal lows, double bottoms, whatever the case is. All right. So when you see things like that, or equal highs, equal lows, when you see things like that, and the market just basically comes down and just barely takes that area out with the wick or the tail of a candle, you got to start thinking, okay, they're trying to grab liquidity here and probably aiming to, once they grab it, because what happens is once they stop traders out, what happens is they quickly turn around and start to make a quick move back in the opposite direction. All right. Okay. Because somebody has to, you know, basically lose in a sense. Okay. And once that happens, like right here, these are sell stops, say for instance, equal lows resting right here. The institutions rush this area here, okay, real quick. And then once they've stopped people out, somebody's lost right here, they're quickly going to turn the market back around and starts blasting to the upside. For how long, you don't know, but you want to start aiming for areas of liquidity, or even areas to fill, maybe gaps above, you know, once price grabbed this area right here, look, there were gaps or imbalances right here as the market came down and grabbed this area of liquidity. So maybe we want to take the trades to take the trade going back up to maybe run this high right here, this previous high right here, and start to fill in these imbalances right here. Okay, all right. So maybe you want to do that. Okay, so those are opportunities and things to look for. When you see setups like that at equal highs and equal lows, always think buy stops, sell stops, you know, double tops, double bottoms, whatever the case is, areas where liquidity is resting at. Now, this is on a 60 range chart. Say, for instance, this is an area where there's liquidity resting on the top end. Okay, so basically we have double tops or equal highs. Okay, so the market was pushing to the downside here pretty much. Okay, after having a run to the upside. All right, it starts making lower lows and lower highs, and we get a low right here that takes out the bottom end, this low right here at 41.13. Okay, then it turns back around and starts pushing higher. Okay, got a quick swift move to the upside, and when you see moves like this where there's a big push to the upside right here, you've got to think who's doing that. It's not the retail traders, it's the banks, institutions. Okay, it's not us. All right, but either way, what we have here is a push to the upside, pull back. Market tries to run higher. We have a double top here or equal high right here. Okay, and then it folds and pushes it downside. Then it turns back around. Okay, and it runs this area here. It runs these equal highs resting right here. It's run by stop areas right here. Okay, so what does that mean? They've stopped traders out. So if they stopping someone out, okay, then that's their goal, is to stop traders out, grab areas where they set up where liquidity's been a liquidity trap's being set up, or there's been a area of liquidity that's been created within the market. Okay, once they run that area, say with this wick, this candle here, see that bearish candle right here, guys, give me a second here. Right here, market runs up, wicks these areas at right here, these equal highs right here, pushes higher. That tail of that candle right there, that bearish candle right here, this was the last bullish candle to the upside. Okay, it swept the area with this bearish candle right here. Okay, we get a close of that candle to the downside. Now, I'm not going short right then and there. I would be looking for an opportunity once price starts to break below this last bullish candle. Now, if you're aggressive and you see something like this right here at the close of this candle, you know, you could go short. But again, that's if you're an aggressive style trader. If you're more conservative, maybe you want to look for the break of the candle in the opposite direction, which would be the break of this last bullish up candle right here, which technically would be this candle right here. But if you're aggressive, you could have got in right here once price swept the area of basically the liquidity grab, took out the equal highs here to the upside here, and you're aiming for this right here. So yeah, there's not much, 78 for, say you got in at 41.70, 78.5, okay. And well, this is on a 60 range chart, so this is a higher time frame chart, okay. And I'm not telling you to take your trades from a higher time frame chart. I'm showing you examples from a higher time frame just as well, where the setups that take place on higher time frames as well when it comes to these liquidity sweeps, okay. So again, if you got in here when you got the full break or closure of the candle to the downside here at 78.5, you're basically aiming for this low right here, this potential formation of swing to the upside here that swept the highs right here. So you're aiming for that low right there around 65, okay. Kind of same scenario set up here. Price pushed up, pull back, made a higher high, pull back, attempted, made an equal high here, broke higher. See the wicked at red candle right there, breaking above right here, okay. You're aiming for the previous low, which would be right here at 75. Now this is a little different, not say different, but more so consolidation going on here, but you're still aiming for this low right here, say 74.25. So you got the wick there, ran the highs here, or the equal highs, comes back, closes here at 85. You're looking for price to come down here to 74. So, nice little run there, but you do get some pullback here, 85 back up to, it's almost a 15-point pullback, but this is off of a higher time frame. Not telling you again, once again, to take the higher time frame setup. I'm just or example here off of a higher time frame, just showing you that these type of setups just as well take place on a higher time frame as they do on a lower time frame. So you're looking for sweeps of equal highs and equal lows, okay, where stops are being ran, and for price to with urgency or swift move to move back in the opposite direction, okay. And we're looking for that break of a candle in opposite direction to give us the rejection we're looking for. All right. So anyone out there may be asking, well, that's kind of trading trading support and resistance. Yeah, I mean, you're taking a play off of an area of support or resistance, but at areas of equal highs and equal lows, because technically, yes, that's resistance, when you get back up to the tops of something. But again, that's not my style of actually trading. I just look at it as it's grabbing liquidity. It's taking or breaking slightly above or below an area where there's equal highs and equal lows, double tops, double bottoms, whatever the case is, and knowing that once they capture that area there, grab that area of liquidity, that they're going to possibly turn the market back around, or the market could shoot back around in the opposite direction fairly quick. So just look for opportunities like that. I'm not saying they happen all the time, but when they do happen and you're able to catch them, you should be able to profit. Definitely. So if you get into the move, waiting for confirmation of the rejection and getting in the trade. All right. Just don't jump into it once it sweeps an area and think that it's going to quickly turn back around. Okay. You have to wait for the rejection. Again, for me, that's a break of a candle in the opposite direction to signify for me to take the trade. All right. But that's all I want to show you guys in this video here, to talk a little bit more about liquidity, sweeps, or grabs, whatever or however you want to call them. They do take place in the market, and you have to understand why. Okay. So I appreciate everyone tuning in, watching. If you're a current subscriber, thank you guys for everyone who's currently subscribed to the channel. If you're not a current subscriber, I would highly recommend you do so. There's lots of free, valuable content I'm giving away on this channel because I want to see people succeed in trading. And I'm not saying you have to follow my strategy of actually how I trading centered around supply and demand, but maybe you want to take it and couple it in or incorporate it in to current strategies that you use. I mean, there's nothing wrong with that. Making something your own, taking a piece of what somebody else may have shown you and you already have something of your own and kind of merging the two together. But I highly recommend, if you're interested, please do me a favor. Click on the subscribe button down below by clicking on that red sub button. Make sure to click on the bell or hit the bell next to it and turn all your post notifications on so you never miss one of the uploads here in the channel. Those that are interested in joining our great Discord community, you can find the link to the Discord down in the description portion of this video. Now, I received several comments pretty much on the daily, just requests or asking how traders or people that watch the videos can actually join the elite membership. It's really inexpensive. It's $6.99 a month, not daily or weekly. It's just monthly. And most of those who have already asked already know what the elite membership is. But if you're interested in joining the elite membership, click on the join link or button, however you want to call it. It's on this video up top somewhere. Within the title of the video, you may see there's a link that says join. You click on that, and there will be two tiers that pop up: the loyal channel supporter and the elite membership tier. The elite membership is $6.99 a month. For all those that do not know, what you receive is the trade breakdowns as well as the video playlist, where I've pretty much picked out, because there's over 500 videos here on this channel, to where I've hand selected videos that are pertinent, the ones that stand out, the ones that are imperative, the ones that really should truly make a difference. If you take the time to watch the videos and allow the information to absorb and sink in, you'll understand the way that I actually trade. So again, you receive everything that you would get in the loyal channel supporter, like the emojis, the badges, the priority reply to comments. On top of that, you get the trade breakdowns and the video playlist. Okay, the trade breakdowns definitely help. They've helped tremendously for tons of traders out there. If you don't believe me, you can come over to the Discord and ask fellow members that are all part of the Discord community, and they'll respond back just as well. But what the trade breakdowns are is a breakdown of my trades, my personal trades that I take, and every single day, pretty much when I'm trading. Most instances, I'll post like most traders do on the Discord. We all post our screenshots or screenshots of our trades we take, our entries. So a lot of times I'll go into detail about and break my trades down in a video that I will make private to the elite members, so that they grasp an understanding better too, as to why I placed the trade, why I took the trade, what I was thinking, my whole thought process leading up to a trade. I break it down so that I could make it as elementary as possible for you to understand what the thought process was going into a trade that I took, okay, or have taken. And there's already tons of those type videos that are made private to the elite members. Again, it's $6.99 a month. You're getting so much information, valuable information, by becoming a elite member. So, but those are just the things that you do receive for that price tag of $6.99 a month that most traders or most people that follow the channel do not get. Those are people who are, I'd say more so, that are, not say loyal supporters, even though they are, but they are really helping to support me as a content creator, and by providing this valuable information to you guys. Okay, all right. Now I have tons of videos on the channel that where I discuss and give away lots of free information, because again, I want to see people really succeed. But if you really want to really focus in and really get an inside scoop and idea of how I actually really trade, and want to see the breakdown of my trades, and as well as that video playlist that where I picked out all the videos on the channel, the ones that I feel like are really important, then you might want to become an elite member. Again, all you have to do is click on the join link on any video, this one here, or any video across the channel here, or you may be able to find it on the homepage of this channel here. Click on join, and then you can sign up that way for $6.99 a month. I mean, it's basically, like I always say, the price of probably what you would pay for coffee if you're buying a Starbucks or Dunkin' Donuts or somewhere. You may be probably spending more than that. Maybe you're spending $7, $8, $10 a day on a cup of coffee, but it's relatively inexpensive, for the information you're receiving. But that's all I have for you guys today. Again, if you're interested in joining the Discord, find that link down in the description portion of this video. I'll see you guys in the next video. Take care and goodbye.